Hello, everyone. My name is Kadu Guillaume. I'm one of the founding partners of Confrapar, a pioneer in the venture capital industry in Latin America. First of all, thank you for having me. It's a pleasure to share with you the revolution that is going on in the venture capital Latin America right now. I'd like to start by giving you some numbers on Latin America. If Latin America was a country, it would be the third biggest world economy with a GDP of more than 5.5 trillion US dollars and a population of 654 million citizens. If we think of venture capital, more than 90% of the deals in the region pre-pandemic came from those four countries, with Brazil standing out with more than 50% of the deals. That imbalance might not seem good, but it also means opportunities. For instance, when we look for companies to invest in Latin America, we want companies that have the potential to expand throughout the region. Say we find a company in Colombia, and we might want to bring this company to Brazil. Or if we find a company in Brazil, we want to take this company to Mexico, Colombia, or Argentina. So my goal here today is to show you why Latin America is a good place to invest. In this presentation, I will cover the size and quality of our labor force, our fast-growing digitalization, especially after the pandemics, and how a mature capital market was fundamental to finance all those opportunities and create a healthy business environment for technology and venture capital. There is no way to talk about technology and venture capital if you don't have the talents. So that's why I'll cover an important area, an important pillar of venture capital industry, which is the labor force. The region is now experiencing a demographic dividend. It is similar to what the United States experienced in the 90s, when the baby boomers, those born after the Second World War, hit their 40s. So when that happens, you have the most part of your population in the most productive years. So that bonus will account for a real increase in productivity in the region. And these trends we are seeing now are likely to continue for the next 15 years in Latin America. As I said, if Latin America was a country, it would be the third world economy with a population of more than 650 million people. But apart from the sheer size of the labor force and its productivity brought by the demographic dividend, we also see an increase in the education of the workforce. The education expenditure in the region has grown to more than 5% of the GDP, exceeding that of developed countries, and accounts for the higher increase in engineering graduates we see in the bottom right graph. Our STEM workforce, STEM being an acronym for science, technology, engineering, and math, is growing double digits, bridging an historic gap. And make no mistake, you can only sustain high tech growth in whatever region with a high growth in the STEM workforce. So let me talk now about digitalization and why it matters more to Latin America than to other regions. Here we have selected some graphs to show examples of the fast digital adoption seen during the pandemics. We can see that internet penetration is growing steadily at an 8% CAGR. Most of new internet connections now come already through a smartphone. For the e-commerce penetration, we can see that it jumped enormously in Brazil. Comparing those two graphs, we can see there's still a huge gap between internet penetration and e-commerce penetration, meaning it will keep growing and bridging that gap. Now let's understand what I mean by leapfrogging. This jump in e-commerce penetration, for instance, has doubled the e-commerce penetration in Brazil alone. And that jump was also felt in many other technology sectors. It means that the digital transformation in Latin America will be much more pronounced than in any other developed countries. We are witnessing a true revolution in the way people do business, shop, and go about their day-to-day lives. It's not really a case of innovation and disruption. Those technologies like e-commerce were there for decades. So it's a case for adoption. Most Latin Americans that have ever experienced e-commerce did so for the first time last year. As an example, Brazil launched last year an emergency aid to help those Brazilians that were left out of work because of the pandemic. So a large portion of that workforce, around 15 million people, wasn't banked, which means the government had no way to give them the cash assistance. But in less than 2 months, the government launched an app through which more than 70 million people could get the government assistance. Out of those, 15 million people had to open their first bank account in the process through an app. So the increase in productivity was not expected, at least for the next few years, and its impact will be felt in productivity, digital inclusion, financial inclusion for years to come. And that was just one example. I can give you many others. We have invested in software as a service companies. Many of them have tripled their revenues in less than 1 year. So what happened is most companies realized they could do more with less. And that triggered a revolution in demand for software. And those software companies came looking for funding. And now there is a new topic we want to cover, which is how the mature capital markets in the region help those companies to grow. So let's start by looking at capital availability. Let's take this graph at the bottom of the slide. Here we can see that the total venture and growth capital invested in Latin America as a proportion of its GDP is still behind many of its peers at 0.11%. India, as you can see, gets almost 8 times more venture capital in relation to its GDP than Latin America. It means there's a lot of room for growing the industry in the region. But now let's look at how this availability has evolved over the last 5 years. So you can see it's on the graph on the top. We see a steady increase in available capital. However, much more capital have flown to early stage deals than to growth deals. We here at Confrapar focus on growth capital. As I told you, we believe that what Latin America needs the most is not capital for disruptive innovation. What the region lacks is high productivity. And we strongly believe that technology will be the driving force to increase that productivity in the region. So for us, the word here is technology adoption. And the pandemics was a driving force for technology adoption, as we showed you. So now even growing at this pace of a CAGR of 51% for our investments and 18% for our growth stage investments, we are still at 0.11% of GDP. So that's, again, an opportunity. We are funding companies here with a solid demand. So demand for tech has increased a lot. And we are being able to also IPO or sell some of our companies to newly listed companies in the stock exchange. Last quarter, for instance, we were able to sell Vindi, which is a recurring payment platform provider, to LocalWeb, which you can see here. LocalWeb is a newly listed company in B3, the Brazilian stock exchange. B3, by the way, has been very effective in attracting tech companies. So here at the bottom right, there are some other examples of newly listed companies. So you can see Stone, PagSeguro, and XP, which are fintech examples, the most obvious sector. But we also see some different tech companies, different sectors, such as Arco, a net tech company, Neogrid, a supply management company, Bimobi, which is a gaming company. We see a good example is Unicoba, an energy tech company we invested in 2019. We have just filed for IPO at B3. It's an energy tech. So later on, I'll explain a little bit more about some non-obvious sectors that are also thriving here in Latin America. So alongside with venture capital investments, the market cap of LATAM's tech companies has also grown strongly in relation to its GDP. So we have now reached 2.2% of GDP with a CAGR of 65% since 2003. It means we are growing a lot. Our market cap growth for tech is steeper than US or China. But in spite of that growth, we are still at 2.2% of the GDP, meaning, again, opportunities. Just as an example, Berkshire Hathaway recently announced it is invested in a new round of $750 million in the Brazilian Fintech Nubank. The company, which is the biggest digital bank in the world by number of clients, which they have around 40 million of them, is not listed yet. Its valuation, however, is at $30 billion. So it's half of the value of Itaú, the biggest bank in Latin America. And ironically, Nubank started out of the frustration of one of its founders with the high fees and terrible service offered by traditional banks. And since we are comparing the new economy with the old one, the most valuable company in Latin America is Mercado Libre, an e-commerce giant. Here you can see one of their ironic ads showing how difficult it is to deliver 1 million parcels per day in Latin America. The fact is, technology plays a role here. It's not that difficult anymore. Inventory management, delivery automation, and now they are able to offer same-day delivery in cities such as Mexico City and São Paulo. The Argentinian company is now more valuable than Vale and Petrobras, the mining and oil giants, which are among the biggest exporters in the region. So now let's talk about sectors. It's an interesting topic since some specificities here in Latin America have led the investors to choose and fund different companies in different sectors. One of the sectors that has received a lot of attention from the investors is clean tech. We have wind and solar farms being heavily funded. So as you know, those alternative energies are intermittent. So to increase their productivity, they need energy storage, which means batteries. So currently, most of the Amazon region is not connected to the power grid. So great distances, relatively low demand, makes traditional transmission and distribution costs a barrier to energy companies that serve the region. So we saw more than 270 remote locations in the Amazon region alone. That makes 3.2 million people that are not connected to the grid. And most of them are not expected to be connected at all, representing a potential market of around $3 billion for off-grid solutions. Off-grid solutions are basically photovoltaic panels and lithium battery storage. So that would be the solution, but most of those locations right now have their power need partially supplied by fossil fuel, which is diesel generators. There are huge costs and a burden to the population and to environment, since diesel has to be sent via airplanes and boats through the forest. So we then invested in Unicoba, the leader in energy storage in the continent, a region that strongly needs energy storage.
We are installing the first lithium-ion batteries that are replacing the old and expired lead acid batteries and replacing the diesel generators that's in the room behind me. And this community will never have to buy dirty diesel anymore to power the posada, to power the school. This school and the posada will be powered by solar and by lithium-ion batteries that will last at least 15 years without any maintenance.
We just saw a project where Unicobo partnered with the Schneider Electric and others to bring solar panels and batteries to these communities. This is what we call different opportunities. Another sector I believe you would expect to see in Latin America is agri-tech. The region is an agricultural powerhouse. Brazil alone exports more than 50% of soybean in the world. So it would be natural, in our view, that the region would develop technology to improve that industry. Many funds, some exclusively, decide to invest in agri-tech. The farmers are investing heavily in technology, automating an already high-tech, high-productive farm. We, for example, invested in XMobots. XMobots is the bigger drone manufacturer in Latin America. The company's drones are mainly focused to the agribusiness. So they are able to map and screen the fields looking for pests, and then come back and spray the defensives only in the affected spots, saving money, and in the process make the crops healthier. So another interesting application that XMobots drones do is mapping the plantation, especially sugarcane. So they fly the drone, they map the plantation, and they feed the information into the harvesting machine. By doing so, the machines will have a much better precision as opposed to satellites, for instance. So the machine will not hurt the sugarcane roots that will still grow for more 5 years. If the machine, for instance, kills some of the roots in the harvesting, it will mean loss of productivity for the next years. Another example of a different sector is urban mobility. Latin America is a huge continent with many, many challenges to overcome. One of them is logistics and transportation. We've seen many funds investing heavily in the last mile solution for urban mobility, urban transportation. We decided to invest in aerial mobility. There are more than 10,000 cities in the region, and they are served by more than 1,000 airports, including their smaller airports and airfields. Remember, we are not as well served in terms of flights as United States and Europe, but that's where technology comes in. Flapper is the leading marketplace for private general aviation seat sales. The company has already established relevant partnerships with some of the main air tax companies. Flapper aims to optimize the market and to make private general aviation an attractive option while increasing the usage of air tax companies. Although the company does not own a single airplane, it gives access to more than 700 airplanes and helicopters in the region. When the pandemic struck, it was quite a challenge for the company. But instead, it brought many different opportunities. The company is now providing cargo flights, ambulance flights. Its revenues have quadrupled since the start of the pandemic. It's becoming a logistics company, which is, by the way, another heavily funded sector in the region. But even though there are some different sectors, most of the capital in the region still goes to the fintechs. It's a huge industry, being completely reinvented. And for a region where many people were still out of the banking system, it's a good opportunity to leapfrog and adopt a digital bank, such as Nubank. So it's natural most of the money will go to fintech. We also funded fintechs. As I said, We just sold Vinzi to Local Web. We also sold Muxi, another fintech, to Visa last year. Well, I could go on and on with many examples, but I wanted to leave you with a message, which is I actually hope you would remember Latin America is a big region, is growing fast. It's outpacing China, United States, and developed countries. There's an opportunity in venture capital. Companies are still underfunded. You remember that funding available is only at 0.11% of our GDP. You also remember that the market cap of our tech companies are only at 2.2% of our GDP, but we are bridging that gap. We are growing fast. Thank you very much.